some of his own contribution into your RRSP.
Yeah, as to like help with your taxes, so you don't
Yeah,
have
that's
to.
the RSP match. It's
So,
not
so your
actually
income is not
it's
crazy,
not really
right?
to help you with your taxes. It's just to put more contribution into your account
Oh
to
yeah.
like promote RSP.
Mhm.
So that's part of the slides.
Mhm.
Mm-hmm.
No, but it was also to reduce your gross income, right?
Gross. That's for your own contribution for the RSP. That's what's doing the tax deduction. The employer putting their money into your, that's for you to have more money into your RSP.
Oh, that's in
And that's
addition to your income, not from your income. Okay.
not really like to your income. It's in addition to your RRSP to which is not part of your income
Okay. Well.
yet.
Okay, sure. Max contribution for Dan. You also take the minimum between 30,780 and this guy's income times 0.18, subtracting, oh, not subtracting, adding, right? Because it accumulates his unused contribution room. And the employer contribution only applies to Rena because it never said anything about Dan.
Mm-hmm.
Yeah. Okay, makes sense. I mean, I think that one was decently understood.
Yes.
What other? Copy image. Assume your gross pay period is 9,000. You're in the. Oh yeah, that tax bracket. Is that the lowest tax bracket? Should be, right? I almost forget.
I'm sorry. The tax brackets.
20.5.
20. Oh yeah, that is part of the tax bracket, like one tax bracket. Yeah. Though, from what the question is asking here, like your whole income is in that tax bracket. So yeah.
Yeah. Okay. Spendable income. You save 900 per pay period in a TFSA after paying income tax on 9K. Spendable income? Isn't that just okay? A spendable income equals, okay, oh wait, hold on, gross pay 9,000. Spendable income is equal to gross pay minus gross pay times 20.5. Wait, 0.205. Get rid of the tax and get rid of the 900. Yes, it does work out.
Nice.
B, spendable income. You save 900 per pay period in an RPP. What is RPP? Registered Pension Plan? What is an RPP?
RPP. Hold on, let me see. Yeah, that's a good question. Let me take a look. RPP, registered pension plan. Oh, it's kind of like RRSP, but
Branded differently.
yeah.
So then this means, I'm assuming it deducts your actual taxable income. So you take 900 away.
For deferral method, most likely, yeah.
Yeah. You take 900 away before applying the tax, and then that amount is subtracted from the regular income. Wait a second. Wait a second. If you put 900 away into that account, you just pretend like your income was never 900 above. Rather, you just pretend you always worked with 8100, right?
Never 900.
If you were to tuck 900 away from your income, like you just pretend like you were working with 8100, right? For your income to begin with. Would that be?
This is a 900 away you put away from your after-tax income.
Okay. No, I think it does work out though. Hold on. Spendable income. Does it count as your spendable income though?
Spendable income.
No. No, it doesn't. Okay, no, it doesn't. You can't spend it because you put it in an RPP, and whatever an RPP is, you just can't spend it, right? Unless you take it out.
Unless you take a penalty, yeah.
Registered pension plan.
Okay, yeah, I just caught out to what you said. So yeah, like when you put 900 RPP, then this way of storing money helps you defer your taxes.
Mm-hmm.
So yeah, if you put $900 into your RPP, it's onto an RRSP. So in that case, you only have $8,100 of money taxed instead.
So I did the income minus 900 minus the same number multiplied by the tax.
Yes.
Mm-hmm. This could have been a pretty free quiz, actually.
Yeah.
Well, we're about to find out if it's still true. Which of the following is not a basic step for retirement planning? Increase your income by working part-time. Well, that's too particular. And obviously no. Analyze your current assets and liabilities. Possibly. Evaluate your planned retirement income. Stronger than the previous reason. Wait until the 10th year immediately before retirement to determine savings amounts needed.
That was just sus.
And that's the answer. What? Estimate your spending needs and adjust them for inflation. Obviously not. So I'm thinking it's...
Which of the following is not a basic step suggested?
Oh, it's not. Oh, okay, that makes more sense. I was like, wait, what the heck? I can't read. Yeah, that would make more sense. Because everything is like, oh, you could consider it. But wait until 10th. Yeah. Waiting all the way and then like last minute, well, relative last minute. I guess that's what it would have been. So let's just say rationale. It is irresponsible to wait until just 10 years before retirement, which is akin to last minute behavior. I don't know. Okay. Expenses which you can expect to have increase when you retire. Housing, insurance, medical. Well, housing should go down because you kind of paid it off from living that long, hopefully. Insurance might go up, medical might go up, but housing goes down. Housing likewise again. Transportation, I don't know. Maybe you're done paying off your car. Clothing, leisure, maybe you're not traveling like that. Insurance, medical, and leisure would make sense because like life insurance is more expensive, so is medical. And leisure, I guess, if you're traveling, not that you're like done working. Federal income tax, probably not because you're not going to be working, right? So rationale, older, at an older age, the probability of death is higher, thereby causing, let's just say, life insurance and health care services to cost relatively more than for those of younger ages. And then also leisure expenses may also rise if the person in question likes to travel. Okay. me save this real quick before I lose it. Not put that there.
Yes.
Downloads. I'll call it MGT150 final exam studying. Okay. Which of the following does not typically become more important housing considerations for people when they retire? Okay, so what do you not care about in the house? Proximity to shopping. Well, you do care about that. Proximity to schools. Well, I guess you don't care about that. Maintenance, you do care about. Church, I mean, if you're religious, and transit, yeah, if you want to move around. This is pretty self-explanatory. Older people will be less likely to be still in school compared to any of the other services mentioned above. Okay. Well, that covers the first quiz.
Yes.
Okay. Quiz 9, which we actually got full marks on, but... Oh, is this the freaking crazy easy one?
Quiz 9? Yeah, I think so, yeah. I did say that one of the quizzes was extremely easy.
Yeah.
It should be that one, supposedly.
I think we're gonna have to go through the class examples at some point, because do you remember our term test? Well, I think it was like slightly, what's it called, like underwhelming, because we studied like the mortgage thing and we thought it would be up, but clearly it over prepared us and we both got 100 on the spreadsheet. But that's because we studied the class examples. I feel like that one's gonna need a bit of a revisit. Okay. I don't know what I just copied over, but maybe I'll just put the screenshot again. Okay. What's the annual interest for 1K bond with that? I mean, I guess bond price 1,000. Interest. Annual interest rate. AI. What? Okay. Well, 5.25%. Annual interest amount equals their product. Pretty much. All right. Right. Nothing really to see here.
Yes.
Let's see here. Jackson's Metal. Another bond convertible to shares. What's the common stock? It is, after all, just a ratio. Okay. Bond price 1K. Let's say share number of shares desired would be 49. So then conversion price. Yeah, it's the ratio. Okay, makes sense. Oh, here we go. Corporations choose to issue bonds for reasons except financial leverage, yes. Finance activities, I mean, yeah. Like, why would you get a bond? A bond is kind of like borrowing money from investors, right? Either to scale the money itself or to like fund business activities. So in that note, definitely financial leverage and finance a corporation's ongoing activities. Reduce the taxes to be paid. I actually don't understand this one. Do you have an idea?
To reduce the taxes to be paid to federal and provincial governments. That may be something you can convert that on. My rationale for this question is just the all the first four choices all make fairly enough sense, except for the last one.
Yeah. But why does the third one, the taxes, apply? Like, why is it even true?
That might be because that's only in my opinion, so like it might not be like absolutely right, but my thinking is that bonds promote the economy, and because that's the case, then the government reduces your taxes when you create bonds, so that to promote economy, and that's
Yeah.
If you
Is
can
it
put it
through
that way, that makes a lot of sense. But
yeah,
like,
through a tax reduction or well, in some way.
mhm.
Okay.
But when you look at the last one, they say that they use bonds as an investment for their earnings. That makes a little bit less sense to me because bonds usually is when you need money and not when you're using your money. So if when it says that we use bonds as an investment for our earnings, then it implies that we're using our money for bonds, which doesn't make sense.
Okay.
Mhm.
Okay, when need to either, let's say, scale the, let's say the money itself, or to fund activities. Governments also highly favor bonds because they wait, what do they do for the economy? What do bonds do for the economy that you said? That
I
what?
guess they just create the flow for the economy.
Oh,
Hmm.
they what?
They how do you say that?
they they boost the economy.
They keep the economy active.
Okay, activity.
Maybe not boost, but just they just preserve the
Oh,
activity of
okay.
the economy. Preserve it.
Okay, they help preserve the activity of the economy. Economy. Okay. Also, the last reason does not make sense because, yeah. Wait, you said as an bonds for an investment? Yeah. Okay, because bonds are the investment, not the item used. To invest for earnings. Contradictory. I just okay, sure. A bond which is backed by only the reputation. Okay, this is just straight up definition. Debenture. Idea. This is simply the definition. Debenture sounds like it roots from the, which can be tied to, and like if their reputation is in debt. Oh my god. Okay, great. Yeah, I mean, there's really nothing more to do here.
Textbook questions. So.
Yeah, I guess this would account for the multiple choice. Can't say you haven't studied for MGT as long as we went through all the quizzes and the lecture notes, I guess.
Yeah.
Given the assets, liabilities, and number of shares, net asset value, I remember the NAV, the NAV. So I guess you just do your net worth and then ratio with the shares, right? So assets 225 million, liabilities 8,060,000, and yeah, shares desired 4,820. So then we can go net worth would be the difference between assets and liabilities, and you can say NAV. Okay, yeah, net asset value per share. Let's double click that. Oh my god, I did not mean to do that. Okay, so the ratio between here and there, yeah, 45. There we go.
Nice.
Tong invested into mutual funds. I remember this is that one lecture where we yeah, we had to watch the videos of the professor coughing. Right.
Oh yeah.
Yeah. Okay, investment into mutual fund, 22,800. The fund charges 2% commission when shares are purchased. Commission for fund. Okay, let's just say providers. Let's just say. So 2%. When shares are purchased, calculate the amount of commission. Wait, what? We didn't even practice the complicated calculation.
The complicated calculations.
Yeah, this is just a normal multiplication. I remember we had to do like quite a few terms in a fraction. Well, just 2 terms, but like I had to take the average. Maybe that was the last lecture.
Yeah, the yield thing. Honestly, if you know how it works intuitively, you don't have to like worry too much about like,
Yeah, I
the
guess. But it
calculations.
always helps to like try it out so you don't have to think too hard.
I guess.
Okay, well that completes quiz 9. Quiz 8. Okay. We're getting more to the familiar ground. This is nearing the time before the professor abandoned us.
Yes.
Harsh Patel. I'm not taking your money.
Good.
And Leila Saini. Okay. Indian family. Take home pay. Wait, okay, so they're combined. Combined take home pay. 8K monthly. Let's call this monthly then. Their expenses. Okay, combined monthly expenses. 6K. Minimum for emergency fund. We multiply by some number of months, right? Was it 3? Minimum. It has to be.
3, yeah,
We
3
did like
months.
only use 3. Like we never use any other number of months.
Yeah,
and then, we can see it.
Vary a lot, but default is 3. Yeah.
Yeah. Minimum amount for emergency. So it does happen to be 3 months of. It wasn't income, but it was expense. It was expenses, yeah. I remember you detailed about this when we were at the restaurant. Yeah, so take 3 months of the minimum. Well, not minimum monthly, just of the monthly expenses. Yeah. Oh, geez. Alright. Assume that 3 years ago you purchased a 10-year corporate bond paying 6.5%. Purchase price was 1K. Okay. Bond price 1,000. 10-year okay, term. Okay. Term in years. 10 bond interest rate, I guess, is annual. 6.5%. Current interest rate is 5.5%. What's the dollar amount of interest that you receive from your bond investment? Okay. A dollar amount of interest. Well, intuitively you kind of just take the bond price and multiply by your interest rate. $65. Okay. Assuming that comparable bonds are paying 5.5%. I mean, I think they already detailed that, so they're doubling, repeating. Yes. Okay. What's the approximate market price that you could sell your bond? So I guess the idea is your bond is making you more money than if you were to buy a bond now. So your bond could be sold as, well, a product. So, okay, sell price for bond equals Frick, how do we do this? 5. How did this number come to be?
Comparable bonds are paying for. Oh, that is the more so in terms of intuition. Can you take a look at the question again? So, give the bond initially.
Did you just multiply again? I'll try it. Multiply by the bigger percent. Shoot, that doesn't work. Okay, how did that number come to be?
Yeah, you just divide by 5.5% the thing.
Oh, it's a ratio. Hold on, no, that doesn't make sense.
I think
the whole number, right? Divide by 5.5. No, it's not the whole number. It is the No, that doesn't make sense. That's too big.
It's what is your interest in?
Oh, is it this one divided by 5? Oh, okay. How does that work?
Okay, so it's a bit hard to grasp onto intuitively, but if you want to see this question in another way, if the bonds right now is at 5.5%, then how much bonds would you have to buy for you to have the same amount of interest profits?
Oh yeah. Oh, hold on. Yeah, good night. Yeah. Anyway, sorry. You were saying yes. All right, you're saying.
So the concept, if you were to look at this question the other way, is how much bonds would you have to buy in order for you to have the same amount of interest profits?
I see. Because then you would have done.
That's the other way of thinking about it.
Because when you divide by 5.5, then this amount you multiply by 5.5, and then you obtain the amount of interest that is the same as the interest from the 6.5, right? Okay. Yeah, sure. That's actually yeah, no, this amount or this value represents the price of a bond which a 5.5% interest rate would require to, let's say, accumulate the same, let's say, $65 of interest as the 6.5% interest rate bond starting with $1,000. Yeah. Okay. Sell price. Did the bond increase or decrease in value? Definitely increased. It is clear that the bond increased in value. It has a more competitive rate than what is presently offered. And D, or I guess, well, C2. C1. Okay. Why did the bond increase or decrease value? Yeah. The bond increased. What? Can't spell. In value because market rates decreased. Means the current market rates have less leverage on the, let's say, growth of the investment, I guess. Okay. The best way to set your investment goals. Well, this is like SMART goals.
In some way.
Investment goals. Okay. Investment goals should be viable and realistic. Therefore, they need to be specific, measurable, and timely, just like the SMART goals in fitness. Okay. No, nothing else really makes sense here. Yeah, sensible and grand, that's kind of funny. Specific and grand, too ambitious. Relevant and small, well, you're not getting anywhere. Long-term and diversified is the most competitive alternate choice, but
I guess they're different goals. That's the problem.
yeah.
Long-term and diversified. That's the senior people's goal. Relevant and small. That's like the young people, and specific grand, sensible and grand. That's for like different wealth levels. So
Yeah.
Oh.
And yeah, this one just is more applicable in a general case as well, it seems. Okay. Let's get some. No, it's my last piece of gum. Oh my god. Reducing risk. Yeah, this is a no-brainer. Every answer is a very concrete segment, except for diversification.
And this one is just basic stocks, stock knowledge,
Yeah,
or just investment knowledge.
this one is unknown. The idea is always to diversify because a profile's assets. Okay, because a profile's assets of one sector can help balance that of another sector. Should that other sector be losing your money, let's just say. Put all eggs into one basket, and the profile could lose big with no, let's say, backup leverage. Okay. Jenna owns shares. Quarterly dividend received. Wait a minute. This is just a multiplication. Oh my god.
Yeah.
Number of shares owned 650. Dividend per share 210. Yeah. Actual dividends received, EIVD, yeah, equals to this times. Yeah, that's it. Tamara. Okay, we have shares, price per share, price sold, commission, another commission, term, dividends. Okay, there's more numbers now. Annual shareholder return. Okay, number of shares 110. Share price 33.60. So she held them for a year. Term, I don't really know if we have to care about that. Sell price per share $41. Commission, that's fixed, 35. Okay, purchase commission, sell commission. Also fixed, 41. No, 43. Yeah, those are commissions, dividends. Okay. $198. I think I got all the numbers. Okay. Part A. Annual shareholder return. So I guess that's in dividends. Oh wait, that's in a percentage. Uh-oh. Do we have to factor in all the numbers? Okay, now I'm lost.
Where are you lost at?
Where the numbers come to be.
For the annual shareholder return?
Yeah.
Alright, let's take a look at the question. Just like scroll up a bit. Okay. So, what do you remember about the annual shareholder return?
I just know it's a ratio based on the amount
Your profit and your purchase.
Okay. Profit.
So, look at how much you profited from the investments and from the dividends, and ratio that with like how much you bought.
Okay.
That gives you the answer.
Annual profit. So I guess that would be share price times dividends received. That's only the dividends. But did she ever oh my god. Wait, that's so many numbers. What the heck?
Okay, I guess they do make it a bit complicated, so like don't worry about like whatever is happening in the numbers, just work through the problem intuitively.
Okay. Annual profit.
So how much did you spend on the
we have to break it down
bonds,
more.
like the shares?
Yeah, okay. Cost of all. I say cost of stock. Like all shares. I'll just call it like that. Okay. That would be the number of shares multiplied by the share price.
Wait, Alex, I'm curious.
Yeah.
If you invite someone into a server VC, will they only see this VC or?
Oh, you just cut out, but I think you were meaning to ask. Yeah, I'm pretty sure they only see the VC.
Okay, because I do have a friend too, which is also taking MGT, and like, if you want to, we could invite her. In.
Yeah, I mean, she can definitely join us. I think that should work.
All right, sounds good then.
Is there a button?
Well, I'm gonna invite her in that case, if you don't mind.
Yeah, go for it.
All right.
Wait, hold on. Is there a particular button where you click on invite to the VC?
There's an invite button, yeah.
No, I guess if it's the right one.
Yeah, if, it should be the right invite link.
Okay.
All right.
Yep.
Sending it.
Yep.
Her name should be LG. If she ever joins.
Okay. All right. Cost of all share. Okay. Cost of all shares of stock. I don't know why I would call it. I could just call it purchase price. Purchase price is cost of all shares of stock plus purchase commission.
Cost of all shares of stock, purchase commission. Yeah.
Okay. Oh,
hello.
All right.
You hear us?
Hopefully. I think.
Alright. Anyways, moving on.
Yeah. All right.
Hmm.
And,
Wait, so she has. Do you have access to the whole server?
Oh.
I think so. Was I not?
Okay.
Oh, wait, you didn't use the button.
Actually, if that's the case, how about we just do a make a group check in that case?
Hold on. I swear there's a.
Yeah, we can hear you right now. No worries.
We could. Hold on.
Okay.
Oh man, I don't know where the button is. Wait, hold on. Invite.
Wait.
No, there should be a guest invite feature. Open the server menu, select invite, choose a guest invite option.
Come on. I'm gonna kick you for real quick. I'll let you just be warned. Guest invite.
I remember they literally implemented it like.
I don't know.
Invites. Huh.
Yeah, I mean, if we don't see it, we can just create a group chat with her. That should make things.
Yeah, wait, hold on. How to guest invite Discord videos. Let me just see if they show it here. Yeah.
Your server anymore, and this is a fantastic addition.
Oh yeah, here we
Which
go.
they've kicked in this quick video. I'll be taking you through invite a guest. Now this is different to the invite people.
Oh, what? There's an invite a guest? No way.
Is there? That's invite to the whole server though. So.
Wait, what? Do we not have? Do we have that setting on? Damn. Yeah, I don't know. I guess not. Invite a guest. Edit invite link. Oh, they hit it there, no wonder.
Oh.
Yeah, it's grant temporary membership. You have to take this option.
Grant temporary membership. When they disconnect, can they see the rest of the server though?
I don't remember, but I'm pretty sure it should be like they don't.
Okay, let's see. Server invite link settings. The moment they disconnect. What?
Right.
The invite your teammates over. They can
Edit
only
invite
anything
link.
like that. Someone else. We only see the voice channel that we're in, and nothing more, nothing less. You can see that's pretty much it. I can only open the chat on the side, which brings up.
All right, sent the invite link now.
Okay.
Should be good.
Yep. Yeah, there we go.
All right.
Yeah, that looks more like it. Welcome back.
Yes.
Yeah. Okay. Wait, let me see if it worked. Yeah, it did. Because you can see on the channels it doesn't show, right?
Mm-hmm.
You can choose any like channel and it.
Yeah.
Yeah.
All right. That sounds good then.
Okay. Yeah. Elegy? Yeah, I just to like catch you back up on Well, not back up, but like to catch you up on what's going on. This is
Yes.
quiz 8. Finishing up the last question. The whole quiz was on multiplying. Yeah, emergency fund. Well, I think bonds. And this last question is the only one that's involved. Okay, where were we? Yeah, once we finish this last question, we can actually like recoup to see what we're working on. Well, we're just gonna go through the rest of the quizzes. Okay.
Sounds good.
Yeah, where were we? Cost of... We're trying to find the purchase price of... No, the... Okay, I'm lost again. We have the purchase price. We have not... Do we need to get, let's say, earning? Like how much we earned? Annual shareholder return. Do you remember, Richard?
Annual shareholder return.
Yep.
I remember this. You have to. I'll just send you a screenshot.
Okay.
Yeah, sounds good.
In the VC
But
chat. I
annual
think.
shareholder return, it's just your total profit divided by your total money spent.
Okay.
Or total profit minus the commission for selling. And then...
yeah, profit already accounts into that.
Alright, forward this to
What is this?
MGT. There we go.
Or spending.
Yeah, so we're just
Oh wow,
running through
that's
the
very
quizzes.
specific. Okay. Total profit is... I guess we just do it intuitively then.
Yeah.
So we actually have to go how much she sell for. 110 times... Well, I'm just gonna use the numbers here.
31.
I should have... Oh shoot. This times that, subtract... Wait, shouldn't I do this times the 41 minus the 30 thing, subtracting the purchase commission, subtracting the sale commission, and adding the dividends, like that?
Let me see.
I don't even know if that was proper.
Hold on. That's a lot of calc.
Okay, so I took the number of shares, multiplied it. Yeah, multiplied the 41 minus the 33.6. And then I subtract the 2 commissions. And then I add the dividends. So I assume that's the profit.
Profit. Let me take a look again. Just be sure. I always space out a bit.
Am I screen sharing?
Yes, you are screen sharing.
Okay.
I got 771 instead.
Oh, what? How? Is this factoring
Might
not?
be me who's wrong though.
Oh. Total spent equals to number of shares times share price plus first commission. Oh, that's the wrong number. First commission plus the second commission. So annual share. Wait, is this really the annual one? Let me see if this is 25%.
It's 4.7%.
Wait, that can't... No. Something's wrong. We're missing a number.
Can I look at the total profits? So what is that? So number of shares times the profits from selling. Minus the purchase commission. The purchase commission is in your total spent.
Oh wait, whoops. That would make a lot more sense. I don't know why I did that. Sell commission. I should not have done that. Either of the commissions, right? Yeah, I don't know why I did that.
Okay. Oddly enough, the purchase commission is actually no. The sell commission is inside the profits. So you actually have to do
Hold on, what am I doing then? Minus the sell commission, because yeah, that's what you would have taken. How are we still off? Do I not add the sell commission here? I guess not. Yeah, okay, because you didn't spend it technically. Bro, I don't know what's going on with these numbers.
Okay, let me just do the numbers on my screen instead.
Okay.
So, I'll just get my alt in real quick.
Hello. I think the solution does it by a sum though.
Excel. Okay, so we have a purchase price of 33.6, right? And then we have a sell price of $41. We have a purchase commission of how much? 35.
Yep.
And I have a sell commission of $43. What else is there? Dividends. How much are the dividends? Alex,
Yeah, wait, what?
how much are the dividends?
Oh yeah, it was 198.
Total?
Yep.
Alright. Let's see. Is there anything else we need to know?
Looks like I think we have. Oh no, you got it. Well, 110 shares.
Yeah, I think that's basically it. Oh yeah, number of shares.
Yeah.
Number of shares, that's 110.
Mhm.
Okay. So what we do is that we first start by calculating the number of profits we get from selling. So this is equal to the difference between the purchase and the sell price. So 33.6, or rather 41 minus 33.6. Oh gosh. Right, so this is the profit we get from one bond.
Yep.
And then we multiply this by 110.
Yep.
And after that, we given that this is during the selling process, we also get rid of the sell commission. So that's minus 40. And then we have the cost of purchasing. Actually, no, let's just get rid of that first. And then we have we also put profit from dividends.
Okay.
And this is equal to, where is this?
You might have to control Z.
Where do I go to? There you go.
Okay.
Profit from dividend, that's 198. Totally. Let's just make sure I got everything right. Sell per. Yeah, and then this is the profits you have from profit is equal to this plus this. No. This plus this. That's 9. That's the total profit we get from these things. Now we have calculate. This is the profit section.
Yep. Total spent.
And this is the spending section. So we have purchase price, and that's equal to purchase commission times hold on, equal to this. Oh, she left.
Oh.
Yeah, she said she was sleepy, so she said that she will leave.
Okay.
So, Mm-hmm. Yeah. So got D4, which is the purchase commission, and then we times this by the number of shares, and then we also add the purchase commission. Never mind. It's purchase price we should be having here. Purchase price times number of shares plus purchase commission. That's 37,731. And so the annual shareholder return, to which is equivalent to the profit ratio. This is equal to the number of profit you have divided by the purchase price, and that should give us 5. Though I
got the same number, bro.
259. Hold on, let's see. Dividend yields plus commission. Sell price.
Oh, that's so weird.
Did they round the numbers? Is that why?
No. They don't do it like that. They take the sum of the dividend yield and the capital gains yield.
It should still get to the same thing though.
Well, it's off by a little bit. You actually have to calculate your dividend yield first. It's so weird.
Mm-hmm.
No, it's meant to be like calculate your dividend yield first. Dividend yield 198. Okay, let's be generic. Dividends received divided by total spend, which makes sense. That's your dividend yield because it's like, yeah, how much dividends did you actually get for what you spent? And then capital gains yield. This one is gonna be capital gains. How do we do this? I guess we go
It's
shares times share price original. Oh no, that doesn't make the 736. How do we get that number?
where we find the profits from selling your bond.
How?
So say that you have one bond, you bought it for $30, you sold it for $40. How much is your profits?
Oh, well, $10.
$10.
Yeah.
Yeah. So in that case, you bought your shares at 35, you sold them at 41. So how much is your profit for one share?
Okay, so we got 6, right?
Mm-hmm. And how much is your profit for 110 shares?
666. Wait, what? 660, right? Yeah.
Mm-hmm.
Where do we get the extra? 736 minus 660 is 30. $76. Where'd that come from? Oh wait, no, that doesn't make sense.
It's actually not $6 your profits. It's 30. It's you bought it at 33.6 and then you sold it at 41. My bad.
Oh, okay.
Oh.
Oh no, then we're good. So I think we just do equals price, the sell price minus the original price multiplied by the 110. 814. Oh, then we have to
814.
subtract.
There you go.
Subtract the purchase commission. 779. Huh? Really? You have to subtract both the commissions.
Both the commissions?
And that's your capital gain. I mean, I guess that makes sense. Because if you subtract your purchase commission, that's like getting rid of like the tax on, well, buying it, let's just say. And if you subtract the sell commission, it's like another tax, I guess, from selling it. So
Hold on, let me.
They inherently work the same way.
I guess so. Yeah.
You just treat them as tax. Okay, so
Yeah.
idea, let's say, profit on all shares. Okay, all common shares. Less, let's say, all. What do we call it? Commission. Buy, sell. I guess, is that what happened? Yeah. Yeah, I guess so. How does this compare to if we were to... Oh, okay.
Let me guess. I think there's no direct look like.
Wait, what?
No, it's nothing. No worries.
Okay. All of this... Oh shoot, you can't do it like that. All of this divides by total spent. What? Oh no, we good. Okay. Okay, I see, maybe. You subtracted... No, what you were originally saying about annual shareholder return kind of works. We just need to get the terms correct. The first...
Yeah, I just forgot to like minus 35. That's why we
Oh, the numerator is the dividends plus all of this, which is the numerator, profit on all common shares less all commissions. So this should be dividends, the numerator less all commissions. Yeah, literally. You do have the less all commissions. That makes sense. So your intuitive approach does work. But I didn't know they were also just comprised of the dividend yield and capital gains yield. I guess that makes sense. Because they make up your return together. Yeah. Okay. Comprised of both dividend and capital gains yields. Let's say calculating it directly by comparing total profits to total spent, let's just say. Yeah, that was a tough one, which isn't supposed to be tough. You just have to understand that all commissions are like tax. What quiz number was that? No, JavaScript error.
JavaScript error.
Oh yeah, here we go. Okay. You are the sole earner in a typical family.
You are my sunshine and rainbow. Still not out. What?
Probability statistics. Let's go.
Quick method. Oh. Yeah. Yeah, that's my grades if you want, like...
Yep.
I forgot my stream was open.
Only stats is out though this term.
Yes.
Have to wait for it. Sole wager in a typical family, 100K gross annual income. Income replace no, it's these methods.
Yes.
Income
That was
replacement.
the easiest one though.
Oh, yeah, I remember. There's more involved ones.
Yeah. Though I kind of doubt that the third complex method will be in the exam though. I'm hopefully not. It's like my friend, they're being up, but like I don't know. Hold on, let me yeah, like income replacements, non-working spouse method. Those are the two things, and like those we can probably exam no, like definitely. But the third method, that's called the family need method.
Yeah.
And it's like calculation for that is way too complex. There's too much memorization.
Yeah, that's
Too much actually. That
bro, that
you
one's more
remember how we
involved
had,
than the 3% or the 2503. Like I remember
it's
that.
so much worse than that. So like, as a matter of fact, like if you remember, we have the family need method calculation in one of the quiz, like in probably that quiz. But thing is, if you look back at that question, you'll see that the instructor gave 3 marks to everyone for that question.
Oh, so we don't even know if we got ours right? I mean, did they give feedback?
They did not. They just I'm guessing they probably just said like this question is too difficult. Too many people just had it wrong. So.
Oh, bruh, that better not show up on the exam then. I mean, we'll go over it regardless. I mean, maybe. I mean, I don't know.
The thing is, they probably like won't assess on that in the exam because that's just a bunch of like memorizations.
Yeah, it's probably not the point of the course.
It's got no financial skill required. You just have to memorize the numbers, which is like not a good way of learning or so.
Okay, income replacement method.
My hope is that they don't put this in the exam because of that.
And if it's on the exam, then what? Textbook cramming on the exam?
Yeah, just know how to use the textbook at this point.
Yeah, that would be GG's. Okay, income replacement, some constant, has to do with another prime number. Not 5, so 7. Yep. It was divided by 70% multiplied by 7 months.
So what is the definition of an income replacement method?
You replace 70% of your income for 7 months. Well, not really. Years. Oh yeah,
70% of your annual income for 7 years.
Okay, yeah. So 70% of this for 7 years. Yeah. Okay. Concept: the income replacement method requires to replace 70% of your annual income for 7 years. Okay.
Like double 7.
Yeah. I guess I don't forget that, hopefully. I mean, even if we did, probably just textbook scour, but we have, 2 hours on the exam. Has awarded full credit. This is the one you're talking about.
That's the family need method, which is like extremely complex.
Yeah, I wonder, what do we have to do for this question?
Yeah, I appreciate the question is gone here, so...
Oh, no, explanation is here. No, that's good. That's what I was...
basically the answer to which you can see is extremely complex.
Yeah, but it was like life insurance,
lots of conditions and lots of
family needs method. Well, why is it 75%? That's so random.
It's like a rule in the family need method. I'm pretty sure so.
Oh.
But like, yeah.
Well, I guess it,
35%.
yeah, it's like total needs and available assets and huh?
They also have education funds too, which is another like addition you do. Yeah, and they have emergency funds too. Yeah, also like something to take a look at.
My goodness.
It's basically a sum of so many you have to do it all chumped up. And then you got funeral expenses.
Okay, well, at least if we don't have the numbers, we'll at least get the idea down.
Yeah.
Some of all needs use the 7 years 75% of what is the 96k annual income?
Annual income.
Annual income. Notice the 75% compared to the 70% from the what was the last one called? Income replacement. Yeah. And are there any other nuances? Well, this is just contextual. I think that minus 20,000. Debt payment.
You kind of like group things together.
Yeah.
Then you'll see that one part we need to have an income replacement for 7 years. Another part is that we have to be able to pay for any debts that we have left. So you see that there's debt payments, there's education funds.
Pay for immediate debts. Okay.
And then you also notice that there is an emergency fund.
Okay, now
to which
less.
covers your full annual salary for 3 months.
Less all available. Oh. Yep. Less all available assets, so liquid, stocks, death benefit, life insurance. What's up with this RRSP?
RSP.
Oh,
So okay, this one is a bit harder to grasp onto, but when one of the parents dies, I think the RSP all gets transferred completely to the other parents.
yeah, the spouse thing. Yeah, that makes sense. Yeah. Finally, add in tax deferred DFER. Okay, to spouse investments like RSPs, pensions, and additional. Yeah. So I guess the concept is if you ever have the numbers on the exam, get all the necessities, use the 75%. It's kind of like income replacement, but for some reason it's 75 and not 70. And you pay all your immediate debts. You obviously contextually see what else needs to be accounted for, but you also have to do your emergency fund. So the weird 75% thing over 7 years, emergency fund, those are like the things you just take for granted. And then all immediate debts are like the third thing, and then the fourth thing is just whatever contextually is available. That's for like needs. And then subtract all your assets that you have right now. So liquid, stocks, death benefit, life insurance. And then add... Oh, you add this. That's so weird. Yeah, sure. Okay. Okay. Yeah, you add your actually I don't understand why you add this anymore. Whatever. Why do you add your RSP? Cuz you need your RSP?
Do you really add those?
What does this mean? On the like I thought this was like less, right? Because
Yeah, so
the
like 1.1 million less than 1.9, the 192K.
yeah, and then what
Do you
about
add
this?
those?
Do you add those?
Oh, actually, yes. It's like 1.1 million minus the 214K. Now it's not the 1.93K.
Oh, wait. How did the 214K come to be?
It's
Oh,
the sum of all of
oh,
your
it's the sum of
assets.
those. Yeah. Less that. And then what are these?
Those are. I don't think those matters in the calculation unless there's something I didn't see. No, you don't have to worry about them.
Wait, really? Are those just like irrelevant?
Those are those have no relevance in the calculation, so we just put this in to like let you know like
Oh,
what happened.
oh, so
Things.
instead. Oh, notice. Do not factor these into the calc. Okay, sure. I mean that's interesting. Okay, sum of all needs, less all available assets. These are just observations. That would make sense. Okay, well that was a cancerous question. Done for. Gross pay of 8.4K. Oh yeah, I'm thinking about this. What if we just get through only the quizzes for tonight, so that tomorrow, like, cause our exam is in the evening, right? What if we do the class questions tomorrow before the evening, right?
Last questions? Yeah, sure.
Yeah, cause if we do the quizzes, we'll pretty much finish off the night like only doing the quizzes, and then it makes sense to cover the, like, you know what I mean, right?
Oh, by the
The
way, did you also try out? Did you also skim the slides as well?
no.
Yeah, should probably do that. Like, do these two things: look at your past quizzes, and look at the skim the slides.
Okay, yeah, I guess that should be done. But what I meant by the class questions are like these ones.
Yeah.
Yeah, like these ones we'll go over tomorrow. Okay, slides I'll
Yeah,
probably
like,
look a bit tonight and then continue on tomorrow as well.
make sure to get both of these done for tonight, and then tomorrow we make sure to like tackle the questions.
Yeah, okay. Okay, gross pay of 8.4K, disability insurance. Oh, this is the other stupid one. Oh, 76% of her earnings after 3 months waiting. Okay, waiting periods. Okay. 76%. Okay, so I guess we just lay out the numbers. Gross monthly gross pay 8400. Let's say coverage percentage, that's 76%. Waiting period, like, let's call it grace period, no coverage involved. 3 months. And then okay, A will say disability benefits term 9 months. So let's say true disability true benefits term. So we take the 9 months, subtract the grace period, the waiting period, and then you apply it to the disability benefits, or to obtain the disability benefits, which is given by the coverage percentage factored into the gross pay and scaled for the true number of months. Yeah, $38,304. Okay, that makes enough sense. I guess we just have to factor in the grace period. Probably isn't too hard to keep track of that.
That's the main trick about the second part. Just forget to put the grace period.
Yeah, the 3 months waiting period. Okay. What if her disability benefits started when she was 30 and last until she was 60? Oh yeah, okay. Disability. I mean, if you just follow the same way that you write out the process in the spreadsheet, it does work out the same. I spelled this wrong. Disability, bro. Okay, disability benefits term. So we'll go. So 60 minus 30 multiplied by 12 months. I didn't put my equal sign. Yeah, 360 months. And true benefits term equals to the 360. Subtract the waiting period, 357. So disability benefits is obtained by, again, taking the monthly gross pay scaled by the percentage and then scale it. Oops. What? Okay. Scale it by the true benefits term. Yeah, looks like it. That's crazy.
Yes. Good job.
Thanks. Multiple choice. Which of the following is a major concern with respect to life insurance? Inflated premiums? Nah. Elderly tend to purchase more insurance. That's too specific. Average amount insured per individual is much higher than what they really need. Well, it's true, but I don't know. That's probably the most correct answer so far. Most Canadian families have sufficient coverage. No, it's completely the opposite. And then that would be the fifth answer. Most Canadian families have insufficient coverage. It just makes sense because I think in Toronto, like 80% of people are in debt or something crazy like that.
Yeah.
So naturally it follows that most Canadian families have insufficient coverage. Yeah. That amount in Canada. No, that percentage. Wait, what percentage of Canadian population is in debt? Yeah, 73%. Okay. Rationale over 70% of Canadians are in debt, with most of the debt being quite substantial. Therefore, it naturally follows that most Canadian families also lack sufficient coverage of life insurance. This is let's say easily a concern over the previous concerns. Okay, well, I don't think that a greater concern. Sure. No, life insurance covers for those crazy, costly, let's say unexpected. I don't even know what else it covers for, but I'll just put it like that. Okay. Endowment. I forget what that means. Endowment. Endowing something is okay. That does not help. Providing with quality. What? Did I just read that right? Yo.
What? That's insane.
Have breasts?
I had two brothers who were both better endowed than me. What the
Yo.
fuck?
Let's go.
They had 8 inch, 6. I only had 5 inch.
Oh my god. Hold on. No, my File Explorer broke down on me. 쇼단다
Windows
이런데.
11. Wait, do you use desktops on your Windows 11?
Not on home computer.
Oh, okay,
School
never mind
computer.
then.
I mean laptop, yeah.
That would make sense. What?
With quality. Endowment.
I didn't doubt.
Okay, yeah.
But that was me.
Yeah. Okay.
Seen quite a few clips around here.
Alright, well, that's fun to see at least. Wait, so it literally just means providing with quality. I mean, I guess I can see how it means you have bigger tits or a bigger dick. I guess. Sure, because they both provide. I mean, one provides milk and the other one provides, you know? Okay. The proceeds are paid to the... I mean, yeah, this question is no-brainer. Like, you own the policy. I mean, you hold the policy, then you're entitled to the proceeds.
Yeah.
What are
To be honest,
proceeds?
though, that's a textbook question. So
Yeah.
how about you try to find the answer in the ebook right now?
Okay, it's training time.
Practice.
Oh goodness. Read. This is the right one? Okay. Search. I don't know how what did you search for the other one? Like, for the
I just searched every term you saw on the question. That's the main.
Literally? No, like the one that said like how long do you hold on to tax, what's it called? I don't remember.
A tax report, right? Let me show you.
I swear, I searched tax report and it did
tax report. Tax return.
I couldn't find it.
Is that what it's called?
Who must file? Like it doesn't give.
Oh, file. Filing your federal and provincial. You say who must file or how long?
What? I mean.
What was the question?
Oh, let me just find that then. Oh gosh. Oh, dual mobile. Approve. Okay. Yeah. Courses. MGT. Grades. Yeah, here we go. Damn, I got 9 questions wrong on this. Correct answers are hidden. It won't even show it. Oh my god.
Yeah.
Okay. Yeah, I think it was like how long should you hold on to your tax report for? And it was like 3 months,
Tax
6
report.
months, 12 months, forever, 6 years.
It's in years.
Oh yeah, 3 years, 6 months. Yeah.
Let's see. 9 years.
Well, you said the answer was 6 years, right?
3 year, ideally 6 years. Minimum.
What? I'm searching 6 years right now and it doesn't even give me anything.
Let me take a look.
I don't know how you could have searched for that. That's
You look for 3 years instead.
Okay. 3 years. I mean, I just got the chart.
Look for the other results.
Okay.
Yeah, expand on the other ones.
Investors.
About never mind, not those. You just have to look test out all the terms that's displayed there.
Okay, well, I guess we'll never find out. Policyholders, okay. Endowment. I mean, I found this one right away. The money is paid to the policyholder. Yeah.
That's good.
Okay.
Yeah, let's
Yes.
take a look. Let's look for them real quick.
Mm-hmm.
Tax.
Oh my god, so many. 1, 2, 3, 4, 5, 6. Oh, 6. Okay, sure. 6 more quizzes.
Mm-hmm.
Oh, this is not that bad though. Endowment. Endowing something is okay. That does not help. Providing with quality. What? Did I just read that right? Yo.
What? That's insane.
Have breasts?
I had two brothers who were both better endowed than me. Oh, I found it. What the
Yo.
fuck?
Oh.
It's called tax
Let's
records. They
go.
had, that's what it's called, not tax report.
How did you figure out to search record? Or did you just search tax?
I just found it. So, in the question, it likely just said it just said tax record with
Oh.
an S.
The S. Oh, you. Hmm.
And just expand through all the choices you have and just read through them. Did you read through them?
Wait. So many options. Oh.
There
It
you go.
says. Generally, you should keep tax records for 3 years from the date you receive your notice of assessment. That would have been a free point if I got this. Holy.
Yeah.
Oh my god.
So, all I had to do was to put in tax record into the search bar and then just look at every query you have. If you find a query that is like kind of related to it, then you look
Wait, was
to
the
find the
word
answer.
records in the question?
records.
Yeah.
Yeah, well, if it's not, then you just look at the multiple choice answers we have. So we have 3 years, got 6 years, got like 9 years. Look at 3 years, and then just look at take a look and just skim through the
I
queries
swear
you
I
have.
did that.
So you're looking at my screen, right?
Yeah.
Just look at through things, and then like
Oh,
just
you
look
have
at
to
the
like. There's so many
that-
results for this.
near. You have to know how to skim the results.
Oh. Yeah, and
So if
then,
you see a
you can
lot,
find
if you
it.
see, so this is something that's theory based. So if you see a lot of that's not. So like, just go through it, and then as you query through, you then see income. Generally, tax record
Yeah.
years.
There we go. Oh my god.
That's how you do it. You have to know how to speed read.
I swear I saw income tax fundamentals though. I might have overlooked it now that I think about it.
Mhm.
Yikes. Okay, I see. That's cool then. That's great. I'm going to put my coping decoration back on. Profile. Effect. Where's my copium? Oh my god, that's cool. Avatar decoration. Okay. We're back to coping. Brilliant.
Yes.
We're now down to quiz 6 with jewelry. I think I
That is extremely simple. So just don't try to overthink that too much.
Okay.
Questions.
I remember this one.
Oh, that's the one where I said that it's all free.
Oh yeah, jewelry. Okay. Ten. You just put in the numbers. 4,450.
Yes.
2500 3500 amount not covered this minus that plus what? Oh my god. This minus that plus this minus that. There we go. This part of the question is not part of your Connect assignment. Why do we get that? I remember. Okay, sure. Actual cash value. I got this wrong. Yeah, okay.
Wait, why did you put 9,000? Oh, you probably used $50,000 for the first one.
What?
You probably put $15,000 as the first value. That's probably why you got 9,000 instead.
Oh.
Actually, no, that still wouldn't make sense. Oh, you used $15,000 on both of them.
Oh. Dude,
I should be using $8,000 instead.
oh yeah. Okay. Okay. For original furniture cost 8,000. Did you also get this wrong, or did you also get it right?
I think I got it. I don't remember though.
Oh, okay. What cost?
Come on.
We just straight up ignored the replacement cost. The present, I guess.
Basically.
Ignored this value because it is, I just say, it is irrelevant to the actual cash value.
You can kind of consider the actual cash value method as, right?
As what?
As selling a car. So when you sell your car, the value you can sell your car can only go down from your car's original value.
Yeah, that would make sense. Because now your car would cost more to repair, and you go like, oh, now my car can be sold for more. I guess that would make sense.
If you use a new value, if say that your car's value has, and then you're using the actual cash value to calculate the price you're selling your car, in that case you might realize, and then you're using the new. In that case, you might notice that the replacement cost might actually be higher, or the selling cost might be higher than the cost to just sell. Hold on, I'm not saying like I'm not kind of spaced out a bit. Yeah, like so the price you would have by selling your car will be higher than the price you bought your car, which wouldn't make sense if you were to use $15,000 instead.
Yeah, I guess so. Yeah, the actual cash value is 9,000.
Like, if you think about this intuitively, you bought your furniture for $8,000. You used it for 2 years, and then suddenly your couch suddenly cost $9,000.
And it's not an appreciating asset.
Yeah, no, it's a depreciating asset like a car.
Oh damn, okay. So actual cash value equals 8,000 subtract why did they multiply by, oh, it's a 2-year-old. Okay, subtract this divided by 5 because okay, I don't want to skip too many. Okay, let's say S lifespan 5 years, let's just say, and current life, we'll just say 2 years. Okay, so then you go actual cash value is equal to original furniture cost subtracting the original cost over the estimated lifespan, so I guess you're averaging it out over the years, and then multiplying by the 2 years because you actually apply how long it's lived for. That would make sense. Yeah. So yeah, idea, the actual cash value is okay, considers the original cost less the let's say average annual cost spread, let's say what factored such spread into the number of years of this, say, object. I don't even know if you call object this product. Current life. Yeah, sure, I'll just call it like that. What amount would it cost an insurance company to replace a family's personal property that originally cost $35,000? Would it cost an insurance company to replace for items increased if the replacement items increase? I mean, just multiply original cost 35,000 replacement $16, and then replacement cost equals to this plus the extra growth. Yeah, this whole quiz is just a no-brainer.
Yes.
I guess this is like our little leverage to like not have to think that much. What amount would the insurance company pay? Oh yeah, is this question. Wind damage, okay. A wind damage 2375. Deductible 1250. Insurance company pays the difference between the damage and the deductible. Or let's be more accurate. Let's surround this by a min function between 0 and the difference. Wait, it should be a max function. Yeah, there we go. Daft of an entertainment system 3050, deductible 2500. Insurance company pays the maximum between this less that 0. Great. Vandalism 486. That's crazy. You can quantify vandalism. Holy, in money. Okay. Deductible 650. Yeah. Imagine if the insurance company can just give you money in this situation.
I'm not nice.
But I guess not. You take the maximum between 0 and, well, what seems to be a negative number, and you get 0. The insurance company does not pay at the end when they can cover the full thing.
Yes, by yourself.
Oh wait, oh my god, I'm getting it wrong. When it says deductible, does that mean what you have to pay, right?
Yeah, supposedly.
Yeah, okay, there we go. That makes sense. Means you have to cover the full, let's say, cost of the vandalism. Great. George and Yuja. Oh, we're coming down to the exhibits. PTSD. Well, not really. If they did the same company, okay. George Insurance 2150. Yuja annual insurance 1875. They would save 10% if they did the same company. What would the future value over 10 years and 6? Okay. Annual interest rate 6%. Annual savings term 10 years. Okay. Future value of annual savings. Equals future value rate. Number of periods. I should not have done that. Rate 10 years. Payment 0. Present value. What's the present value?
Present value?
Yeah.
Let's see. They would save 10%. So, how much money are they putting into the annual premiums, or like on the investments?
How
much money can they put in?
Well, let's just say the amount that they put in, like the 2150 and the 1875.
That's the amount they are paying for the insurance.
Yes, if they insured.
So what's happening is that we have an amount we're paying for the insurance, but if we combine their interest together, we save 10%. But and if we save 10%, then we can use this saved 10% money on something else, and we use this on investing.
In the savings account. Okay.
So what is your present value?
So they would save 10% on the annual premiums, meaning
that they would put this 10% of saved money into investments.
So let's say 2150 plus 1875 multiplied by 10% of that. So this plus that times 0.10. And what the? That doesn't look right.
So their insurance, do you pay your insurance one time or do you pay?
Every year, right?
Yeah, every year.
So that should be not the present value, but the payment, and the present value is 0. Oh, wait, why am I off? Oh, because it's a rounding error.
Rounding thing.
Yeah.
But if you look at the actual answer, I'm pretty sure they allow a certain units. You'll be fine.
Yeah, and it does look like now using the spreadsheet formula, it does match the suggested solution. Okay, so I guess the only thing that you have to care about for this question is being aware that they're paying annually. So if they would save 10% annually, you can pretend like the amount they saved is going into a savings account.
Yes.
And so it's like you're paying or putting that money annually into your savings account. So that's the payment. And you start off without filling it with anything. So let's just, yeah. Okay. Idea, notice that George and Eugia would be saving 10% of their annual premiums, which is akin to an annual payment of this amount. That is why we use the PMT argument. And notice that the present value starts at 0. They don't actually fill money initially. Let's just say it like that. Okay. Oh, okay. That's question 5. Great. I thought we had.
There you go.
Holy. Okay. Oh gosh. Question 1 already wrong. What happened on this quiz? Ahanu. I don't know who the heck that could be. Borrowed some money and he paid some money when he repaid the principal after 1 year. The lender also charged him a service, and what's the effective cost? So borrowed amount is 520. Interest paid at the end, $21. $5 service fee on a discount basis. What? Charged him a $5 service fee on a discount basis. What does that even? Whatever.
Oh, that's the tricky one.
So we want effective cost of loan equals to also charged him a $5 service fee, which means the amount he receives from the loan is $5 less. So it's whatever he received minus the service fee. And then what was the effective cost of his loan?
Cost loan.
Oh, okay. If it's a percentage, it does make sense. You do a ratio between how much interest you paid and how much money you actually got. Because it's almost like you got the money from yourself, right? Because that's what a loan is. Like, you basically borrowed money, but then the cost of borrowing is the interest. So the cost of his loan is really the ratio between how much interest you paid how much you paid to borrow compared to how much you borrowed. And so as a percentage, that would be the effective cost. Let's put this as a percent.
Okay, so effective cost is just how much you actually borrow, like after borrowing. Oh, okay, that would make sense.
Yeah, there we go. Okay, so no.
All right, sounds good.
Concept. The effective cost of a loan is the ratio between the cost of borrowing, interest, let's say TEREST payment, versus the amount obtained from the loan itself. Yeah, let's put it that way. And if the same guy borrowed even more money on a personal line of credit, oh my god, interest is charged at a 15. Okay, so line of credit, $620. Interest rate 15%, but calculated on a daily basis. Daily basis. I'll probably put that. Oops, did not mean to open that. Pay a minimum 5% of remain. Okay, minimum monthly payment. Get rid of that. 5% of the remaining loan balance every month. Okay. What would be his first monthly loan payment? Assume a 30-day month and a 365-day year. Let's say percentage of remaining loan balance. That's a really long way to, okay, sure. 5%. What would be his first monthly loan payment? Okay. First monthly loan payment. So I know you have to take the line of credit, and it's done. You have to multiply by the interest on a daily basis. For 1 month, we're using 30 days over 365 days a year. Oops, I didn't finish that calculation. Times. Say
Your
that.
best.
Yeah, thank you. Interest rate multiplied. Why is it that we do the ratio, the days? We have to express it in years. Oh, I guess.
And yes, but the rate when we give you that, unless if it's explicitly mentioned, it's always at a yearly basis.
Okay. So you always have to convert the number of days in terms of years, right?
The number,
Like if
yeah,
you-
like the
yeah.
your rates into number of days. Yeah,
Okay, always
like
factor
your daily rate.
interest rate, which is assumed to be given in for an annual term into years. So 30 days is 30 over 365 years. Okay. But we also have to. That's the interest. Interest. Okay, dollar amount of interest. And then this will be called remaining loan balance equals, well, that. So minimum monthly payment not percentage, minimum, let's say dollar amount of, equals to the remaining loan balance multiplied by the desired percentage. And then need my clipboard. Yeah, first monthly loan payment equals to the sum of the interest and the fee you have to pay for the month. Yeah, there we go. Let's go. So summary, the monthly loan payment for this first month is obtained by adding the interest, pretty much the same for all months, and the let's say, what do we call this? Let's say the fee coming from the 5% remaining loan balance every month. In short, let's say monthly interest plus monthly fee depends on the remaining loan balance. Okay, sure. That's a weird one. When you do a calculation and it's like a recurrence, that's where it gets weird.
Yeah. Perhaps.
Hmm.
Perhaps.
Bobby is trying to decide between 2 credit cards. Oh, this is just straight up logic. Okay. If he pays with his credit card in full. Okay. Let's do analysis. Okay. If Bobby credit card, then he should not be subject to any interest charges. This means we can assume any, let's say, downsides due to interest. Okay, this means we can avoid any downside. Let's say observations due to interest. Thus, it is not in his interest to select the lower interest rate option. He should instead select a card without the annual fee. Okay. If Bobby only pays the minimum payment, then he may pay an interest on the amount carries over from month to month.
It's a good thing we don't have short answer questions.
Yeah. Oh, we don't? That's great. In this case,
Totally not.
yeah. In this case, interest does indeed factor into his payment amounts, so he should pick the lower interest option. Otherwise, he will be getting scammed by the bank. Okay. Yeah, I think that's just that. Oh my goodness, this existed? Huh. Oh, I mean,
Right.
I guess it's one of those long ones that turned out to not really require much.
Mm-hmm.
It was like a previous quiz that had like the annoying one. What is this one asking?
I think this is hold on. 80. Yeah, never mind. So yeah, it's the basically the sum of all the regular opportunity
Hmm.
essentially. Oh.
Oh. Okay. So total rental costs. Okay. Idea. Annual rent plus insurance plus. Am I tripping? You don't add the security deposit?
You add the opportunity cost of the security. So the security deposit is a one-time fee, right? You pay it once.
Okay.
Mm-hmm. But if you did not pay your security deposit, if you did not pay that $1,000,
Oh, then that could have
then
been
you
used.
would have been able to send this into investment.
Okay. Okay, that makes more sense. Yeah, because the security deposit doesn't technically count as your rental cost. So I guess we can, yeah, security deposit opportunity cost. So, deposit amount times, let's say 6, the provided 6%. Total buying costs, mortgage plus, 9616 is interest. Is that another opportunity cost moment?
For buying costs?
Yep.
Which one? Let's see.
You see what it has in parentheses?
Oh, interest.
I mean, kind of, right? The number is only so big here.
Yeah, kind of.
Mortgage without interest plus, I guess, what? Am I even doing this right? Mortgage without interest. Did we do that?
It kind of feels weird to like do it that way, to be honest.
What do you suggest?
I guess just try out the numbers and see what happens.
Okay, property taxes plus insurance / maintenance plus. Does down payment closing costs? Does that count as part of the buying cost?
The opportunity costs?
Down payment.
Down payment. Is it a regular fee or is it a one-time fee?
One time, I guess.
So do you have an opportunity cost for that?
Yeah.
There you go.
Okay. Okay, so every opportunity cost applies to the one-time fees. But then I wonder what they mean with the interest part here.
That I'm kind of curious as well. So you just try all the numbers and see what you get.
Okay. Do we less the growth in equity?
The growth in equity is what you gain.
So we less it, right?
Yes.
Okay. And the appreciation. Okay, well, if I were to do this in a calculator real quick. So 10, 7, zeros. Why would I do it like this? Equals 10, 770.
Honestly, I have a feeling that the interest is included in the annual mortgage payments.
Okay, let's see. Minus 9616 plus 9616 times 0.06 2560 plus 1770 plus okay, minus 309 minus 3000.
So you're saying that if you're multiplying the 9616 interest fee by 6%, then you're telling me that the interest is a one-time fee.
Oh, I see. Yeah. So it's not. Then what's the relevance of it putting it in parentheses? Why would I do that? No, but then that's too much money now.
Let me see. Yeah, well.
Oh, wait, I didn't do my closing costs properly. No wonder. Multiplied by 0. Yeah, okay. It is. Okay, so what was the point of that? Is this to trick us?
I guess it's a trick, yeah.
Yeah, observation. All one-time fees are subject to being considered for their opportunity cost. Factor in the provided interest rate. All other fees are either summed or subtracted depending on the context. Okay.
Honestly, I feel like the interest amount is like not even a trick. It's just additional information. That
Yeah, I guess this is cool to know.
Like, yeah, sure, you may know that 9616 is the interest rate, but it's still a regular fee, so it's still included in your calculations.
Okay, yeah. Oops. Wait, insert entire row. Yeah. Okay, this is A. Should you buy or rent? This is so stupid.
Yeah, I mean, I guess like for their perspective, it's just should you buy or rent?
Just take the
purely
lower
looking
number.
at the cost, you know.
According to the book, okay, the book favors the lower overall cost for the same specified term. It turns out that rental costs are lower than buying costs after factoring in all immediate costs, let's say annually, and opportunity costs applied to fixed payments or costs.
I don't want to do too.
Therefore, renting is recommended, apparently. Okay. Oh, geez. Something happened here. Calculate the GDS and the TDS ratio. We did this in a previous quiz though, didn't we?
Yeah.
I mean, I think we got this. Okay. Monthly mortgage 150. Property tax 210. Heating costs 125. Other housing costs 80. These are the part of the debts. I remember. This goes into the other one. This is also another debt. Has nothing to do with the house, as well as the credit card payment 160. And then this is like the other section. Gross monthly household income 8.3k. Okay. Gross debt service ratio GDS. Okay. The gross is always less than the total because intuitively total means more. Well, assuming you're not doing subtractions. So we take the everything that is only relevant to the house, not including the debts, as a numerator. So that means the mortgage, the property taxes, the heating costs, and the other housing costs. The denominator is the income, I believe. Yes, sir.
Is that the right answer?
Yeah, it looks like it.
Like, on the red box.
Oh, shoot. Wait, it's not, though. Did I get this wrong?
You got this wrong.
Wait, I did the same mistake then. Hold on. Wait. 2150? 210? 125? Wait, I'm not supposed to add my other housing costs?
So other housing costs is excluded from both calculations. This is something you have to be aware of.
Oh, shoot. Wait, because technically you could have called it like you bought furniture, right? And they're not actually part of your...
They're not part of like housing and heating and property tax costs.
Yikes.
They're just miscellaneous costs.
Oh my god, that is devilish. Okay. Total debt service ratio, TDS, equals all the debts. How did I get that wrong as well? Does it not count as a debt? Is it just completely irrelevant?
It may be a purchase. If you buy a sofa and you don't rent it, then you're doing a cash outflow and not a liability.
I see. Wait, why is this all 160? I might be tripping. Hold on. Wait, I don't know what I wrote for my numbers. 160.
One
Car.
good example of other housing costs may include something like buying a sofa, right? Does the cost of a sofa go into your debts?
No. Wait.
It wouldn't. So it's not included in your TDS ratio.
Okay. Wait, but oh, this is the right answer.
Yes.
I see. Okay. Observation. While the GDS involves the total cost of housing and the ratioed with the gross monthly income, and the TDS involves the total cost of housing plus any debts like card or car payments ratioed with the gross monthly income. Notice that other housing costs is a completely irrelevant say entry to either of housing costs or debts. Imagine it is representing thus this value does not get factored in precision. Wow, that was kind of not cool of this question, but I guess we have to care about that on the exam if we come across this.
Yeah, just be aware of it.
Yeah. Coming in with
That was interesting.
huh?
No, it's nothing.
Okay. Which
Never mind.
which mortgage would result in higher total payments? I think we just kind of do the product. Mortgage A. So, well, let's say term 30 years equals this times 12 months, and then monthly payment 1750 total payment, this multiplied, yeah, wow, okay, that's quite a bit of money. Mortgage B, how different is this? Oh, it's just stuff. I don't even want to call it that. Whatever. First term 7 years equals times 12 months. First monthly payment okay, 1310. Second term 23, that's a lot. Wow. Equals 12 months. Second monthly payment 1810. Total payment, this times 84. Oops, I should not have clicked enter. Plus this time. This times 609. Okay. Clearly, mortgage A results in higher total payments. Oh my god, that was question 6.
Yes.
Let's go. Was that, did I just do quiz 5? Yeah.
First one was the less well done one, right? Never mind, it is, yeah.
Yeah,
Okay.
And the reasons why were simply because I put in the wrong numbers. Well, how did I do this wrong? I don't know. I just didn't get it correct.
Yes.
Oh my god.
I don't want to study anymore.
It's okay. I'm the one doing the entries at this point.
Mhm.
I'm gonna send over the file once I'm done. Assuming you have... I mean, I'm pretty sure these are pretty... There's only 4, and these are like the first 4, right? These are hopefully free. I mean, they've all been... I mean, I don't know. Probably not. But these ones should be... Okay. Savings. 5. Also, we haven't been doing Pomodoro, so like... It kind of makes sense if you're kind of great.
Pomodoro.
You know the Pomodoro method?
Where's the Pomodoro method?
Wait, you don't know about it?
Pomodoro, these nuts.
Well, it basically says you have to study for 25 to 45 minutes, because after, if you keep going, your brain like kind of goes down, and your body literally feels like shit, and you just feel like, oh, I don't want to study. So ideally, you like do these Pomodoro thing sessions, like a session and then like a 5-minute break. But we haven't been doing this, and I kind of consciously acknowledge that I'm gonna feel like shit if I'm like depriving myself of the Pomodoro method. But I'm like, yeah, whatever, just push through. Let's just finish this.
Very methodical and
It works though. If we were to study for a full day, like you kind of have to Pomodoro it. Like every hour you take.
yeah.
I mean,
My method is if I feel tired, I just
yeah.
that's my method.
I mean, I would do that too, but right now we're just entering into a spreadsheet, so I guess
That's true, yeah.
I have to push through just to get this done.
All I want here is for someone to start and for me to start my own company.
You can't wait. Holy.
Mm.
If your monthly expenses 3-6. Oh, and then you can apply the MGD into your actual life. That would be quite exciting. Amount in check. This is so stupid. Amount to leave in checking account.
That is very stupid, yeah.
Idea. Simply put exactly as much as you need to spend in your checking account. The checking account is intended to pay off the credit card. Why entitle yourself to paying more than you plan to pay? Okay.
Ugh.
To
It was not released.
what?
The 263 grades.
Oh, you just check.
Yeah. Unfortunately.
Savings account.
Let's just use the effective function for that, right? Excel.
I think it's present. It's the future value.
Let's
Yeah, you literally just future value and you like
yeah.
you
That's
multiply it
equal.
by like yeah.
Yeah, future value of the effective of nominal rate 13, and then we're doing this. Let's say we do it daily, so it's 365, and then number per, so 0, payment 0, present value
Equals
actually
future value rate
1 year 17 500.
1 year payment 0 present value. Oh gosh. Type 0.
Oh,
Yes.
0.13. Yeah.
Quarterly equals, oh gosh, future value rate is this divided by 4, number here 4, payment 0, this also that,
If you want to do a simpler way,
Wait, I did it
just
wrong. Oh, no wonder, cause I used the wrong number.
yeah. If
Okay.
you want to do this a simpler way, just do equal to the future value of the effect of 0.13 number.
Wait, equal to
Here.
what? Equal future value of.
The effect function. You can actually use that to
Huh?
effect. Yes. And the nominal rate is your rate for 1 year.
Oh.
And n per y is the number of times. So
12?
for monthly, it's 12. And that gives you the your effective
Oh,
interest rate.
instead of dividing it, you put it as
Instead of
arguments.
like doing all this division, you can just do the effect and then just like put in
Oh.
the usual thing. So 1 year and then like
Because it's more methodological. I can't pronounce methodological. Okay, but like in reality, it literally takes more keystrokes to do this in the division. But yeah, I do like this.
But it's easier to think of.
Yeah, well, maybe, sure. Okay,
Maybe.
number
Yeah.
appears 12, payment 0, present value. This type, end of period. How did I enter it wrong?
Why do you have this all the time?
Whoa.
How about put 0.13 instead? Oh, you put it in for 12 years.
Huh?
You put the duration for 12 years.
Wait, are you supposed to put the duration to 1?
To 1 year, yes.
Oh, is that what you have to do when you're doing effect?
Yes.
Because over here I
With
put.
effect, it gives you the actual annual rates.
Oh, that's what you meant.
Mm-hmm. So that's why that's why I feel like this is more intuitive. You don't have to do any more. You just put the rates, the number of compounding, and putting the rest of the number as you.
Okay. Here, we employ the effect function. This takes 2 args. What's the first one? Like, I already forgot. Oh, original. Number
Original
1.
rate.
Yeah, original annual rate. Number 2 is the number of. I don't even know what you call it. Period. Terms. Okay, whatever.
Number of term periods, yeah. Compounding periods.
Compound. It then returns the true rate assumed for so n per in the future value. I'm writing too much. Then n per in the function can be set to 1. Okay, that's cool. The daily. I might just stick with this one not to confuse myself.
Yeah.
Over 365, number of periods 365, payment 0. Wait, how did you find out about that?
About effects,
Yeah.
we use that in class.
Oh, what? Did he teach us?
He showed us. He showed us that.
No, I guess I did not remember that somehow.
Oh, now you do.
Oh my gosh, that's cool. It's good to know that we can actually get points for simplifying like that. Oh gosh, just carriage return. Okay. You know what? These are so blessed. I remember back in the day, in the first 2 quizzes or 3, I was using the chart for every one of them. And now using Excel is just so easy using future value.
You just it's just uses formulas, which is so much better. Yeah.
Yeah.
Don't know why we use the chart in the first 2 weeks. That was ridiculous.
Annual interest 7%. 11 years. Is this just future value? This is literally just yeah, this is annual. Number of periods is this. Payment 0, present value type 0. Yeah, great. We've bound ourselves to the no-brainer questions where I think unnecessarily I put more work into this than clearly it requires using the formula back in the days. What is this asking? Same thing? Yeah, this is just present value. Desired amount of future value. 14,500. Term 8 years. If she earns, yeah, compounded quarterly. Okay. Interest rate 4%. Let me try the affecting this time. So present value annual compounding equals 4%. Oh gosh, okay. 8 years, no payment, future value type 0. Okay, looks like it's working. Present value quarterly compounding. Present value effect is the one that goes onto the rate. Nominal rate 4. Number periods years. What?
Quarterly, right?
Quarterly.
So you
have to do 8 times 4, right?
8 times 4? So how much times are you compounding in a year?
Oh, that's what number peri means. Number periods in a year.
I feel like you can do 4 times 8, but in that case you have to change your period to 1. I have to try it out. Like put 32 as the number per year. Yeah, 4 times 8, and then just put 1 in the number per. I just want to experiment.
Isn't that what we just did though?
You did that in the first one? Oh, you may have put like one number wrong.
1 though.
1. Okay, yeah, that probably does not work in that case. So,
okay, yeah. Oh,
yeah,
so
just-
it's not
just
what
put
we first. It's not what we did.
quarterly compounding, and you do that for the period of 8 years.
Whoa, how did I enter this wrong?
You put 4% as the number per year. You're compounding 4% times per year.
Wait, nominal rate 4%. Number of
For how
periods
many
a year.
Quarterly compounding. How many times a year?
4.
There you go.
Oh. Wait, it's still wrong though.
So that's for the duration of 1 year. Now I want the duration for 8 years.
You actually have to change this number?
Yeah.
Oh. Okay, that's too hard, bro. Holy crap. I can't use the fact, bro. At least not now. Present value. Rate is 4. Number of periods is... No, I have to do this. Divided by 4. Number of periods is 4 times 8. 0 minus that and 0. Yeah, there we go.
Yes.
Using... Thank you. Yeah. What? I can't. Wait a minute. Boom, boom. What did I just do? Huh? Okay, I think we're good. I'm not trying to see the formula anymore. That's okay. Marina Ramundo. Okay. Oh, HELOC.
Oh yeah, that thing.
Purchase price $605,000. Today the home is worth let's say present home value, and this is actually an appreciating asset, so you do care about how much it's worth today. Okay, her mortgage balance. Okay, remaining mortgage balance $372,000. Maximum home equity line of credit. She can borrow. Do you remember these numbers?
Which numbers? Oh, the HELOC numbers. I have to review that just real quick. HELOC. So, I think. Oh wait, it's 80% of the
80%.
the
This is
the market
80%.
value.
Okay, so we've been working with quite a few numbers so far. We have our 3
Yeah.
months. Seen. Well, the second time we seen it was in the family needs method, which we're hopefully not gonna do. But the 3 months with the well, we've seen it a few times. We also seen it with like the waiting period, but I guess that's contextually specific to the question. But then we also have the income replacement method. No, that's not relevant. Sorry, that's the 70% for 7 years. The 3 months is the emergency fund. You scale your monthly expenses. Here we have 80%, and that's for home equity line of credit. 80% of the
So
market.
you remember like that big pile of text I sent in the
Yeah.
text channel?
Yeah, you
So this
detailed
has
it
all
all, right?
this is all the numbers you need for the exam.
Okay, yeah. We'll probably go over
Yeah,
that.
you can see that.
tomorrow.
You'll see that the HELOC thing, and
Emergency fund, yeah, you put it in there. Did you actually like get everything in there?
Yeah, anything that is seen on the quiz.
Okay, yeah.
So, yeah.
So in that case, we just apply it. It is 80% of the market value. How? How's the market value? Oh, okay. No, I'm tripping. Okay. No, we're good. We're good. The market value is like the current value. Okay, we're good. So 80% of this one, subtract the mortgage. It really was not too involved. Huh? Did I do this wrong? Why am I off by $500?
$500. Why are you off by $500?
Did I not do that right? Did I choose it
What
wrong?
is your remaining mortgage balance?
Oh, I just wrote it
There
wrong.
you go.
Okay, there we go. Alright. Idea. Take 80% of the current home's market value. I guess market value. And less the remaining mortgage balance amount receivable for HELOC. Yeah, that makes sense. Bob's net take-home pay income, I mean. Holy goodness. Net take-home income, $5,000. Only 5,000. Maybe for a month? Not for a year, hopefully. Okay, maximum he should use on debt payments. Okay.
Yep.
Yeah. Oh, this is another number. This is the opposite number of 80%. This is a 20% one. This one, you just kind of have to know. Well, I mean, the last one you had to know as well. So yeah, HELOC, 80% of your current home's market value, of course, less your remaining mortgage, and maximum monthly debt payments, 20%.
Oh.
Yeah. And I guess that makes sense. You should not be
20% of
yeah.
gross or net income?
Net income.
Yes.
Yeah, because I mean, you only care about what you actually take home. Because gross is like you make more money, but like you don't even feel the money that you make if you don't take it back. Okay. Yeah, but it's cool that like, yeah, observation. This 20% max of net income is like the inverse of the 80% on the HELOC case. Putting more than 20% of income to monthly debt payments will really be draining. Okay. Yes, that's question 6. Oh my god. Was that quiz? Oh, here we go. And then we're basically just back to the beginning of the course. What is this? Taxable. Oh, it's this one. I see. Oh my god. $430. Eligible dividend income. $170. I remember this one very clearly. Basic personal amount. It's like you can just reduce it from tax. Oh, in fact, for union dues, I think I have to pay union dues for my internship this summer too. So that's kind of a surprise. I spelled that wrong. 1280. Okay, taxable income equals, you take salary, you can less the basic personal amount. Oh, now we have to factor in the numbers. You have to add your dividend eligible. Okay, eligible is 138%. Non-eligible is 115%. 1.38. You subtract your... Oh, do union dues not get taxed? I guess not. And moving expense. Uh-oh. What the heck? How? Wait, the basic personal... What is the basic personal amount?
Basic personal amount. Oh, yeah. Yeah, I'm not clear on what the basic personal amount is exactly, but what I do know is that 15% of your personal basic amount is used as tax credits.
Oh. Okay. basic personal amount is only relevant after you apply the tax, right?
Mm-hmm.
Not on what you can tax, but after you apply the tax. Okay.
Yeah.
Mm-hmm.
After
Take
tax.
of eligible income. If it were ineligible income, it would have been 150. Wait, is this right? Let me verify the numbers. Yeah, somehow I got that. It is 115 if it's not eligible. I don't know how I put that up in my mind. Interest earnings from only relevant after dealing with dollar amount of tax, not relevant for taxable income. Yeah. Conclusion. Take gross salary, subtract any entitled expenses such as union dues, moving expense. Do not factor in the basic personal amount this stage. Apply the 138% or 115% on respectively the eligible or ineligible dividend income. Ignore interest earnings from TFSA. Tax free. Yeah, okay. What is the average tax rate? Oh yeah, average tax rate. It's been a while since we did this one. Paid taxes 11530. Total taxable income. This is just a division. Average tax rate. How much you paid compared to how much was taxable? Let's go.
Yes.
I actually got this question wrong. What the heck?
This is that's the trickier one.
Oh, huh. Okay. Charitable donation. $2,000. That's pretty good. That's a gaming PC. Okay. All right.
Donate a gaming PC to
Yeah.
to charity.
Yeah. How much will you save in taxes? 2022. Assume amounts. Oh my god, what's the number for 2022? Oh no, we just use a tax bracket from 2022. Use the tax bracket as defined for the 2022 tax year. Amounts in excess of 200 do not exceed. Do not exceed. Oh my god, I don't like how they worded that. Equals. Amounts in excess of 200 do not exceed 75% of net income. I don't even know what that means.
The percentages?
No. Assume amounts in excess of $200 do not exceed 75% of net income.
Oh. I don't think that matters that much, to be honest.
I guess it was just like a try not to get a loophole in this question type of disclaimer.
Perhaps, yeah.
Okay.
Most likely.
Tax savings for the current year. This is another one of those numbers you just have to know, right? Is it?
Yeah, basically. Yes.
They specified in class like for the first $200. I don't know why it's 200. You're taxed at 15%, and for the remaining amount, I already wrote this wrong, which is denoted by this minus 200. You're taxed at 29%. That's so random.
It do be like that.
Okay. Idea. For donations, the first 200 is taxed at 15%, and any remaining amounts are taxed at 29%. Okay, now that makes me understand what it meant by the assumption, because do not exceed 75% of net income. Because if you donate freaking $1 million, well, not $1 million, but you're in the 20.5% federal tax bracket, and you can possibly get taxed more because you decided to donate your money. So that's why it says assume amounts in excess of $200 do not exceed 75%. It literally just says assume that you're not donating more than 75% of what you make. Otherwise you're basically getting taxed more.
Tax bracket.
Yeah, otherwise you're getting taxed more than like your actual income, which is like kind of ironic to your goodwill of donation.
Yes,
so that's what that really meant.
Never enough with the great government.
If you deposit that tax savings in okay, 6% future value of tax savings. Okay, great. Tax savings for a current year. So I guess we have to use this one. Okay, present value. This. Let's say interest rate 6%. Term 7 years. I like how we only need 3 arguments, really. Future value of tax savings. This provides future value is the rate. Yeah, normal stuff. Number of periods is also years. Payment 0. The present value is provided. Type 0. 830. Yes. That is correct. They have a rounding error, but that's fine. Idea, deposit the literal tax savings amount as obtained in part A. Yeah, okay, sure. Multiple choice. The principal purpose of taxes is to, finance government activities. Kinda.
To promote corruption in the higher ups.
True. This one is kind of the government defines taxes as their literal funding for keeping themselves running. Can't be for any reason more than for this one. Okay. I mean, yeah, there's nothing really more to say about this. Which item is treated equally for all tax credit? Yeah, this one we actually discussed very, very briefly last time.
Yes.
Rationale. Tax credit are constant amounts which are which are simply subtracted, let's say exactly in okay, in exactly this same way regardless of a person's tax bracket. On the other hand, this is, note that this idea is independent to how many tax credits a person may have, but rather focuses on the idea that a simple subtraction is performed and nothing more fidgety with higher or lower percentages being, let's say, or retained. On the other hand, RSP, employment income, dividend income, eligible dividend are all examples of, well, let's say, types of income that may be taxed differently depending on the, yeah, sure, we'll just say it like that. Common examples of some income are investments held in retired savings plans and tax deferred idea. You want to save taking out the money for later when your tax bracket is lower because you don't have an income because you're retired, that's not working. Taking out the money presently instead of saving it for the future results in you getting crushed by taxes and perhaps even more than perhaps so much so that you would rather have inflation hit your money than the taxes. Okay, sure. Concept, yeah, RRSP, pensions, examples of tax deferral. I think that's the best way we can put this. The other things, other examples, options are just, okay, sure. Which of the following is an example of income splitting? This was another one we had to discuss. Okay. Sharing using the RESP is directly sharing with your minor children. You are literally giving up part of your income for the sake of potentially lowering your tax bracket. Still, your household retains the same total income though. Oh, I can't see what I'm writing. All other options only result in doing something for yourself, but not split. Yeah, okay, sure. Oh my god, that's question 7.
Good job.
Yo, thank you. Finally, last 2 weeks.
Yes.
Okay, great. Accounting. Assets. Liquid assets plus investment assets plus household assets liabilities equals current liabilities long-term liabilities assets minus liabilities. Okay, that was cool. Accounting class. This one we had a discussion too. Idea: calculate the assets and liabilities as usual, as well as net worth. New concept. Cash flows involve involve any spending or income particular. For example, the rent for the month is actually a cash outflow and not a liability. Instead, the how do I say this? If mortgage is a liability and rent is not a liability, how do you like differentiate that?
Mortgage and rent. So, when you rent a house, you don't own the house. But when you buy a house, to which then you have a mortgage, own that.
Okay.
But you have not completely bought the house completely because you have mortgage. The mortgage is considered something you owe.
Okay, I see. That does make sense.
While the rent is just something to which you regularly pay, like a subscription.
Okay.
It's like you subscribe to a housing like complex.
Yeah. Okay. Notice that rent is a cash outflow, while mortgage would be considered a liability. You actually get to own the house in this case. All other purchases are clearly cash outflows, such as paying off 244. Oh, is that not in there? No, that is in there. Credit card balance. Is credit card? Oh, okay, yeah. Auto insurance, lunches, and parking. Note that the credit card balance is a liability, though. It seems that there is a common recurring theme. Cash outflows result in you giving up your cash, which kind of happens with rent, parking, lunch. On the other hand, credit card usages may result you in obtaining something like actual assets, maybe, and are liabilities. Okay, that's cool. Well, yeah. Use intuition for all of the rest of the. Okay, sure. Nothing really more to be studied for this idea. We just have to recognize how to make our choices correctly. Yeah. Do the calculations as needed. Assets minus liabilities equals. Does equity
else in the
Does
Go
equity mean net worth?
equity?
Are these synonymous?
Are they?
Oh, I guess they are. Yeah, they're synonymous. I remember it from mechanical. Yeah, anyway, you don't really have to worry about that. Because I was like always like, oh, the house increase in equity. I was like, what the heck? But I get, because they define equity as liabilities. Oh no, equity is assets. Whatever. It's question 3 or question 4. Okay. Idea. Take how much the girl spent and compare it to how much she planned to spend. Find the absolute value difference, and that's the variance. Use the figure out if it's a deficit or surplus depending on whether she had a budget or not. Okay, well, nothing more to be said there. Oh yeah, this was yeah, nothing to be studied here. Use the future value stand likewise to what was done above when exploring previous quizzes. Can I spell? Yeah, I can. Okay. Yeah, this is just nothing to be studied here. That's great. Likewise, adopt the future value calculation. Microsoft Excel provides these. Yeah. Okay, that's yo. Oh my god. Quiz 1.
Yes. There was no question to that because it was a word tool.
Yeah. Use the hint.
What's the room for the exam? Do you remember?
Wait, what?
What is the room for the exam? Do you know?
I have it written in schedules. IB 120.
Oh, that room.
Yeah, the big one.
Right. I don't want to deal with 209.
The 209 would be fun. Well, maybe not.
There's too many things to learn. It's like. And then you look at the final exam format. It's gonna be like we have to implement 4 or 5 functions.
Oh yeah.
Oh.
Oh, did you see the PDF I sent of my annotated 2022?
I scanned through it. Yeah.
Oh, you actually downloaded it? Yeah.
Oh, your PDF.
Yeah, because I sent.
I did look at your notes that you took today.
Oh, you mean the whiteboard ones?
The whiteboard, yeah.
Oh, those are just notes coming from the actual PDF. It's pointless unless you see the PDF.
Oh, okay, I see.
Like, I went through the whole thing, and you can see like what I'm learning when I switch between the colors.
Oh, okay, I see. Yeah.
Oh, and then I got bored, so I started signing my name.
Yeah. I still have a trash signature at the moment, though.
Oh, it will develop.
I have to learn to get a new signature, I have to be honest.
Oh, this freaking question was not right, bro. Look how small I'm writing.
Oh my gosh.
It's another page, bro.
Oh my gosh.
But
yeah, I don't want to go 9 to be honest.
all this is doing is just dupe 2, closing the pipes, XLP, and just doing a bunch of forks. That's it. It's triple the length of, well, the same thing over and over. This is the fun part. Then you go like, oh, bind socket, listen. It's like, okay, cool. And then you have to memorize how to do this. So that's where it's gonna come. The last mark literally comes from you writing 4 characters. If not 5 if you want to put a space. Well, probably 5. You need to put a space. ls ... And you get a free mark.
I don't want to do 209.
Don't worry, it's a problem for later. Well, sooner. But
I swear, if I have one 3.7 in my whole grade, or even just a 3.3, it's gonna be 209. Like,
what is this called again? Does rule of 72?
72, yeah.
Yeah. So 72, 2 divided by 5.2, and 70 divided by 6.25. Okay, yeah, I don't think there's much to be obtained from this. Oh yikes, something happened here. Oh no, because I just entered a number wrong, I remember. Round time value factors. Okay. Apply the future value formula as always. You can just slowly see that throughout this spreadsheet that I'm creating, like the effort. Well, not just the effort, but like the commitment to trying to write in the solutions just dies down. But also, well, these are no-brainers, so no need to waste your time.
Yeah, they're very easy to do.
Okay. Cash flow, determining your financials. Rationale, creating, while the other options seem somewhat promising, financial planning is ultimately DIMA. Oh my god. Ultimately concerned with an entity's position. That is quite literally the desired answer here. Yeah, there's nothing really more to say. It's just financial position. This one is obvious. Clearly, a 16-year time frame is going to be a long-term financial goal. It's going to involve a long-term financial goal. Okay. Supply and demand. Oh, econ. I think we said the exact same thing back then. Alright, determines the price. This one is mostly clear. Indeed, supply and demand warrants how items in the economy are priced from goods to services. Okay, great. Congrats.
Yes.
Oh my god, that's all the
Finish
quizzes.
all the quizzes.
Let's go.
Yes.
For any of the lecture material, like we're definitely gonna look through it tomorrow, but I mean, what is there to see? I can still remember us like looking through the slides.
Yeah, just get them over there and just like look for anything you're just less sure of.
How many are there? Do we have any in week 12? Did I not download these?
I think there's like 24 of them, supposedly.
Hold on, there can't be 24.
I mean, there's like 2 slides per lecture. There's 12 lectures.
Oh, well, not all the time though. Oh yeah, I don't know why I didn't download that. Okay, class 11. Week 11, chapter 14. Yeah, I just didn't download this. But I did though. No, I didn't. Yeah, week 12. Yeah, put that in there. How did I not download the continuing case? Oh yeah, this was a cool one. We might want to review the continuing case tomorrow. Well, today. Like just once more. though. That's not the right one. Not looking at that. Week 11, chapter 14. Did I just open week 10? Yeah, week 9. I'm not looking at anything past here. I mean, maybe I will, but not for tonight. Okay, speedrun time. Estate. Oh yeah, your wills. Okay, opportunity cost of rationalizing. You keep your family intact even if you left the world. Yeah,
Like,
keep your kids intact.
Skimming the slides, essentially, it's just being able to answer the with more and faster, basically.
Sorry, you cut out.
So like usually you can basically find all of those informations in the textbook. But if you were to look at like the textbook for every single multiple choice questions, in that case, that's not going to be the most reliable because the runtime for in the textbook is like quite high. So
Yes, literally.
yeah, if you can like memorize one or two things, this kind of thing pops up in the final exam. In that case, you'll be able to get like constant runtime.
Constant, literally. Let's go.
Yeah, for like answering these
Holy.
questions.
Alright, well, I think the textbook skimming is gonna have to happen like later in the day. I just realized there's quite a lot to go through. But geez, that was all the quiz questions. You know, we normally spend like an hour on each quiz. So for 10 quizzes, yeah, we got through those fast. Now let me just send over the file. That's not it. Just all of the past, let's say, class quizzes. Oh, let me close this then. Save. Okay. Alright, great. You can forward this to, I think, I forgot her name, who tried to join us earlier.
Oh yeah.
Yeah.
Her name's Serafina.
Serafina, yeah.
Yes. Might be able to meet her
Oh,
during the exam.
I see.
Sorry, I had a blank.
No.
But I take a listen to that. It's pretty nice. The starting part is like pretty good.
Oh, sounds so hype.
It's very rhythm styly.
Oh. Oh, I like that.
Yeah.
I like how it. I didn't really like how it opened, but I liked how it began after that.
Yeah, it's like they got like a jump rhythm.
No,
And he wanted
it's the
another
wave.
song.
It's the vapor waveness. I don't know how to.
Oh, okay. Yeah.
It's that like whoosh.
If you want another good song, search Daisy Crown.
Daisy Crown.
It's from the same artist.
Oh. Freaking Pokemon with a cute ass girl. Okay.
I think it's a Wuthering Waves character.
Huh. Add it in there. Very nice. Okay. Well, damn, that was a quick flash for MGT.
Yes.
One more quick flash tomorrow, maybe a little bit of 209 in between, and let's claim the dubs, bro. Like, yeah.
I still have econ to do between these two. Just letting you.
Oh my god. Okay, I guess you're gonna be doing econ.
Yeah. No, I mean I think I'm mostly ready for econ.
Oh, okay.
An exam is the issue.
Yeah, I'd assume that like when you studied at the
Yeah.
cafes or well just on your own these days, you focused on econ
Yeah. I've been soloing a lot lately. So
for
I'm gonna solo even more during the summer though.
Mhm.
Like, on an internship. Like, I was thinking about like doing some like partnership with projects, but if you have an internship, then I'll.
Wait, you're cutting out. Sorry, what?
Oh. Yeah. So like I was thinking about doing partnership
Part.
projects. Did I cut out again?
Yeah.
Oh. Okay. You know what? Let me just.
Oh. Oh. I can't hear you. Uh. Oh. Okay.
Just give me a minute.
Bro, you can talk with your desktop. It's not that bad. I mean, I can understand and interpret. Oh, okay.
All right, it's working now.
Yeah.
So as I was saying, so I was thinking about maybe doing some partnership for some side projects. But if you have an internship, then I'll probably have to like solo all those myself as well.
Oh, yeah, I see.
Yeah, so
I
like,
feel like even if I have an internship, it doesn't stop me from contributing to a partnered project.
yeah, I mean, if we have time to do this on the weekend, if you have the energy to do that, then we can definitely try it out.
Oh
But
yeah. But yeah, definitely like soloing a project, you'll go through quite a learning curve, and then
yeah,
that'll like bring you to up the cliff to like, oh, now I can actually build something on my own. So if you're
yeah,
like
like
doing something in a group, it's like you assign roles to each other so they can do what you would have done in parallel, which is
yeah, like
great.
this summer term, I have quite a few things planned for it, and like if I do realize all of them, then it's gonna be quite a busy summer, even though I have no classes at all, you know.
Yeah.
So like, yeah, it's like gonna try to get some front end job done,
Hmm.
like fully learn that, learn some more like full stack things like integration with the back end, and then if I can do that, then I will have the skills for full stack, and if I can do that, I'll see if I'll be able to do some product of some sort, and see if I can just get a personal income
Hmm.
from doing something on my own. Sounds
That
pretty interesting. So
yeah, that
I
would
want
be
to try
pretty
it out.
sick.
Yeah, and then after that, I also got like lots of books I want to read,
Hmm.
like lots of them. So yeah, it's gonna be a busy summer if I
Yeah,
can
that
manage
sounds
to get
awesome, bro. Like, can't wait till we grow and scale. Well, sometime in the future, scale up all the
yeah.
way. Well, for now, let's claim some sleep and get ready for our exam tomorrow.
I want to do TO now.
It's okay. One thing at a time. You can do 209 interweavingly, approaching our MGT.
Yeah, I guess I'll just try my best at this point.
Yeah.
All right.
All right. Good
Well,
night then.
yes. Good night.
All right. Good night, Richard.
Bye.
Gosh.